Well, good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for a rough trading day. It was crazy today. And it is May 15th, 2024, Wednesday at 5:40 p.m. Central Time. So the day was all about the CPI and U.S. retail sales, and I want to review them with you. But first, let you and I, before we even look at the boards here, go and take a look at what we've got coming up tomorrow. We have the housing starts at 7:30. The April import-export prices at 7:30. Jobless claims at 7:30. The Philly Fed Regional Index, you saw New York's was terrible. We'll see what theirs looks like. The Federal Reserve Monthly Industrial Production and Capacity. That's an important number, not like today's numbers, but it is important if you're going to really bet that you can get CPI down and people losing, if you will, some jobs, but still keeping the companies going for the earnings. That's going to be important. We'll get the energy analysts looking for the EIA natural gas storage. They're looking for about 78 billion cubic feet of withdrawals. Now, remember, you're now at the point in time where we take out, we don't put in. And as the weather warms up, it's how much you start taking out. And is it going to be real hot? And what does that do? The CPI numbers came out today. So when you look at them, you were, for the month-to-month, up 0.3. They expected up 4. So that was a beat by 0.1. If you drop down here to the bottom, you could see for the core food and energy year over year, you were up 3.6%. They expected that, and that was down 0.2. Okay. So you're slowly falling. Now, you do realize you got to fall an awful long way here in order to hit the 2% that the Fed wants you to get to. I mean, just think about it. If you fall 0.2, how many months does that take to get down there? Advanced retail sales were flat. The market expected them to be up 0.4. When you take out ex-autos, they were up 0.2. They expected that. But so we're seeing some numbers here. What's the consumer doing? Now, for me, what I look at in the morning, we're going to see some Walmart earnings. We'll have an idea from that and what they say in their report, their forward guidance as to how they're seeing the consumer and what they're doing. Walmart sells a lot of staples and people have to buy those. So keep that in the back of your mind. If you go to Costco, you've got to buy, 5 to 10 of these things that you don't necessarily want at one time, but that's the bulk purchase. In the gold market, we soared, but the market today was looking at copper. I don't know if you saw what copper did, but copper got up to 512 and then gave all that up, and you're back quickly to 492. I had been predicting since early in the year, I'm talking January, I believe I was talking this, that one of my favorite plays was copper going up, and I thought it could hit $5 a pound this year. I did not expect it to be in the month of May. I thought it would take longer than that. C'est la vie, you're here. Platinum's also getting bids. So the metals that are in shorter supply are getting the bid. Why did the gold market rally back up and over the 2,400 level? We'll get to that. And the silver up to the $30 an ounce level. All right. Part of it has to do with the dollar getting beaten up. The dollar, the traders think when they see these numbers that the Fed is back in play. I heard people today on CNBC, they're still predicting July. I heard a number of people saying they think that September might be in play. And I heard others, because it was the thing you asked everybody all day today. Well, what do you think? And some people, well, maybe December, maybe not at all. I'm still of the opinion you need to know more to make that decision. I do think December's in play. I have my doubts about anything before then because I don't think these numbers are super, super bad. That's the first thing. Retail sales, yeah, you came in down, and there were some revisionments that they did to February and March, which shows that they're weaker than thought. And I think that got the market going as well. So when you and I take a look at gold, and let's just go there to start with, the market is back up to the old highs on a closing basis. This has already got Thursday's existing prices in it right now. You can see how it's come alive. The last rally high was 24.4880. So you're sitting here right now in the neighborhood of what? That's going to be about $58 lower than that right now. When you take a look at what the chart action is, it's still bullish. Higher lows, higher highs. You're over and staying over so far, this 18-day average. You can see once the market flipped on it, you got bullish again. Once it got under it, you were in the bear camp until the market took out this specific high, and then it crawled back over that number. The resistance is right here. Now, I'm going to be doing a special report, I think, on gold. I got one today that I wanted to look at, and now that I've got it, I'll probably do that report. I'm looking for the market to obviously have support in the 2340 to 2350 level in the market. I don't like the idea that it's overbought. I don't like the idea that prices are at the Bollinger Band to start a buying program. If you can't get it on your terms, pass it. Am I clear enough? At the end of this video, I'm going to show you my ideas. Watch the ad on Bollinger Bands. It's so important. You only stay above these numbers 5%, and generally, if you get a streak, generally, it's not from this pattern where you have a wide Bollinger Band. It's after you've narrowed in a bit. Could it happen like this? Well, if some world event happened, of course it could happen. But barring some world event, I'm not convinced that was it. Although you know how everything streaked here in March, everything just took off and it never looked back. When you look at the gold-silver ratio, I have been telling you that on a relative basis, silver is stronger than gold. It's so easy to follow this. You plot the 18-day moving average of closes, you take one divided by the other, tells you how many ounces of silver you have to get 1 ounce of gold. It has gone from just recently, 86.5 ounces down to 79.86. So the silver is gaining on it, and you see that on the chart. You're over the upper band. You're overbought as can be. The trend is up. Would I tell any trader to ever buy over a Bollinger Band? No. Because more times than not, you will get this play and you will be convinced that something like that's going to happen. I can catch that. I can make my money on that. No, you can't. That is the sucker play. It comes out of this. This is much easier because look at how narrow this was for how long. And all I kept telling you here is you're going to break out one way or the other. Now, sometimes when you get this type of action, one of the things that long-dated options can do for you is you buy a put and a call. Give them out of the money. One of them's going to make a move for you. Got it? You don't want to bet that they're going to stay in this, okay? There's a straddle and a strangle. You don't want to do the strangle. You want to do the straddle, that you're straddling prices, and maybe it'll come out of that one way or the other. I don't see that pattern here. That's all that I'm trying to say. In the copper market, I was beyond thrilled today when the market took off, got up to 512.80, and I was sitting there and I was drinking my coffee going, oh yeah, oh yeah. If you own Freeport, you own some of the other things, there's other ways that you could have participated. You're over the Bollinger Band. I teach, no, you're not going to stay over that very long. You can ride the band. This happens all the time, especially if you get an embedded reading. But staying over the band, you do it. I want to take the other side of the bet. Then we get to the platinum, which is riding the band. You hit it, you pulled back under it, you hit it, and now you're basically sitting under it, on it. And you have an embedded reading. So the pullbacks in platinum are probably going to see aggressive traders buying on the first break to see if there's any more in it because you're embedded. In the dollar got underneath, and just take a look. It got underneath right here, the 18-day average, and it played footsie back and forth with the 18 to the Bollinger Band, and today you had your first move under it. Now, could you continue? You could, but the odds don't favor it, and that's because you're oversold, you're reaching down. If you really fall apart, 103.67.5 is a possible play, as well as 103.63. So you've got a combination of the 100-day and the 200-day. They're literally sitting on top of each other. Literally. That's why you've got the two colors there. So be aware that there's a lot of support for the market there. But what did happen? You took the air out of the dollar. The market doesn't believe, and the traders don't believe, that the Fed is on hold for longer. They think that the Fed will see these numbers and move, and the bets were made today. Actually, they began back here, where the bets were made. You certainly were in a downtrend with lower highs, lower lows. And now you see what that was all about. So, the one thing I keep talking about to you is the Bollinger Band, the Bollinger Band. The reason is it's so simple to follow. You get a set of rules, you learn how to work with it, and you see this all the time. And you wonder, why didn't it keep going? Well, you understand that. Yeah, there are times when it can grab hold, but when it grabs hold, it does so normally. I wish I could tell you it's all the time. It isn't. But normally is way more than 50%. I'd say 75, 80 of my years of just watching it. I didn't do quantitative analysis on it. But when you do something for decades and you're watching it and it's been that long, you get a pretty good feel. That's what it is. And when you lose it, it's a warning sign. So how do you get this? How do you play with it? Well, take a look at this right now because it teaches you how to do it. And at any point, you can move your cursor up to the top right here of our website. You'll see an icon. Click it. It will take you to the course. Or you can go to iraepstein.com education right at the top of the website. You'll see that. I'm Ira. You have yourself a good evening. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.